Hi, Dita's again. Today I'm going to revise one other chapter, part of another chapter, that is definitions of CGST Act 2017. So in this video, I'm going to revise from section 2.1 to section 230. In between, if there is a link between two sections, which is not falling in this range, I'll also be discussing that. So I'll probably will be discussing of around 45 total sections, 30 to 1 to 30, those 30, and along with that 15 others which are linked with some of it in between. Without wasting any more time, section 2, subsection 1, actionable claim. What is actionable claim? Actionable claim has been referred to as section 3 of Transfer of Properties Act. Transfer of Properties Act section 3 says actionable claim is a right to receive a benefit or asset which should not be secured. So the examples of actionable claim can be like betting, gambling, lottery, litigation, etc. So this is basically contingent, something we can receive, which is contingent upon some kind of future event. So out of these actionable claims, lottery, betting, gambling are included in the definition of supply. So these are taxable. GST is leviable on those. Other than these, any other actionable claim, there is no GST on them. Moving on, section 2, subsection 2, which talks about address of delivery. Address of delivery is the address of recipient of goods or services on the tax invoice issued by the registered person. It's a very simple definition. Section number 2, subsection 3, address on record. Address on record is the address of the recipient on or in the records of supplier. In the supplier's book, what is the address of the recipient? That is called address on record. Okay, all right. Moving on. Section 2, subsection 4, which talks about adjudicating authority. Adjudicating authority is that competent authority who is competent to pass an order in original, OIO. So the persons who can actually pass an order in original are like principal commissioner, commissioner, additional commissioner, joint commissioner, AC or DC, etc. These are called adjudicating authority. So who are not included in the definition of adjudicating authority, for example, like CBEC, that is a board, right? They're not competent to, excuse me, they're not competent to pass an order, so they're not included in this definition. Revisionary of authority, advance ruling authority, appellate authority for advance ruling, appellate tribunal, etc. These all authorities are not do not have the power to pass an order in original, so they are not called. They are not included in they cannot be termed as adjudicating authority. All right. Moving on, section 2, subsection 5 talks about definition of agent. Who is an agent? Agent is termed as a person called by any name who carry on business of supply or receipt of goods or services on behalf of another. It's a very simple definition. There is nothing exceptional about it. So, if you think about it, if a principal is transferring some goods or services to the agent to provide to the customer, the principal is delivering the goods, suppose in a case, to the agent. Should it be supply? Yes, it is supply. Even if there is no consideration, it is included in the definition of supply. All right. So this has been done to make sure that the credits actually is carried on through the chain of the delivery of goods, the person to person. When the goods are delivered from person to person, the credit, input tax credit, is also transferred from person to person. That's why they have included this in supply. Anyway, Moving on, section 2, subsection 6 it talks about aggregate turnover is a very important definition. Aggregate turnover, why why aggregate turnover has to be calculated. First of all, it has to be calculated for two or three reasons. The 20 lakh 10 lakh limit, the limit because of which a person will either pay GST or will not, will take the registration or will not, that limit will be calculated. I mean, that limit is the aggregate turnover. The aggregate turnover actually determines or is compared with, is calculated, then it is compared with the 20 lakh or 20 lakh as the case may be, and the rest of the decisions are taken. Whether the composition scheme is applicable or not, that also depends on how much is the aggregate turnover of a particular supplier. So aggregate turnover is the total of following terms. I mean, it includes these figures. These figures will be added to calculate the aggregate turnover. Those are taxable supply, exempted supply, export of goods, sold directly from the job worker, zero rated supply, outward supply falling under the RCM, reverse charge mechanism, whether it is intra or inter, both will be included. Stock transfers, supply to agent or not, it will also be included. So I'll be talking about each some of these exact terms because they have their respective definitions as well. So these terms will be included in the aggregate turnover. Some figures will be excluded from the aggregate turnovers calculation. Those are inward supply, which is in RCM, for which we have to pay the tax. I mean the GST. Yet it will not be included in the aggregate turnover. Transfer to or from job worker, it will not be included. Central tax, state tax, Indian territory tax. I mean the CGST, SGST, UTGST, and IGST also. The tax will be excluded. So the amount of the aggregate turnover will be before the taxes. That's that. These are the figures that will be excluded from the calculation of the aggregate turnover. So job worker scene was there. I mean, two times the job worker came, one in the inclusion, one in the exclusion. In the inclusion, it was the sold directly from the job worker, and in the exclusion, it was transferred to or from job worker. The scene with the job worker is something like this. If we are, suppose a person is X and he has a job worker, he gets some things done through that job worker. He sends goods, job worker does the work, job worker returns the goods to X, and X sells the goods. Or maybe job worker has returned half of the goods to X, which X has further sold them, and the other half job worker has sold by himself. So, so what happens when X sends the goods to the job worker? It is one transaction. In this transaction, it is a case of goods, but it is not supply because transfer to job worker is not considered doesn't come under the job worker. I mean definition of supply. It is not a supply in the first place because there is no consideration for the goods sent. Supply comes in when there is a consideration. Anyhow, there are also exceptions to this, but this case doesn't come under exceptions part, so we have it in a general definition of the supply. which is when there is a consideration, it has to be supply. There is no consideration for the goods sent to the job worker, so it's not a consideration in the first place. So there is no GST on this. When the goods are returned from the job worker to X, absolutely same case. Goods is there, but it's not supply because job worker does not charge anything from X because he's just returning the goods to X. He does not charge anything for the goods. He charges for something for the services that he has done. That is a separate thing. But for the goods, he doesn't charge. He doesn't charge. Uh, okay. Now, when X sells the goods forward afterwards. When job worker returns the goods to X, then X sells the goods afterwards. Then it will be a very normal case. Just like X is a manufacturer and he's selling the goods, GST will be applicable. It's absolutely fine. ITC on the inputs, ITC on the inputs will be available to X. Even though goods are transferred to job worker, ITC will be available to X because he is the owner. There is no transfer as per the understanding of GST. Anyhow, so if the goods are transferred from job worker, if the job worker has transferred half of the goods to X and half he has sold by himself for the goods that he had sold, in that case, that transaction, half of the goods which job worker has sold by himself from his property, that is goods. It is also supply, but the taxable person is still X. X will be liable to pay GST on the amount of sell that job worker has done. So, what happens? The whole story about the job worker is that when job worker sells the goods by himself, that sale is considered to be of Mr. X. So it has to be included in the aggregate turnover calculation of Mr. X. So that is included there. When the job worker, when X sends the goods to job worker, or job worker sends the goods to Mr. X, returns the goods to Mr. X, that is not the supply in the first place. So that has not, I mean, that should not be included in the calculation of job worker, sorry, aggregate turnover of Mr. X, basically. Anyhow, so that's all about, okay, that's all about aggregate turnover. Moving on. So let me, as I told you, I mean, as I revised before, aggregate turnover includes first of all taxable supply. What is a taxable supply? Taxable supply has been defined in section 2, subsection 108. Taxable supply. For being a taxable supply, our supply has to be it has to be a goods or service. It has to be a supply, and it has to be liable to GST. The three conditions should be satisfied to become a taxable supply. One is goods or service, one is supply, one is leviable to GST. Second one I told, I revised exempted supply. For exempted supply are two or three categories. Exempted supplies are nil rated. Exempted supplies are 100% exempted. The exempted supplies are also non-taxable supplies. Exempted supplies are also non-taxable supplies. Now, exempted supplies also does not include. Exempted supply includes three things I revised. One is nil rated, one is 100% exempted, and one is non-taxable. I'll talk about the non-taxable level in just a moment. But exempted supply also does not include zero rated supplies. Now, first of all, nil rated supplies, which is included. Obviously, nil rated means it's there in the list of the rates, but rate is zero. 100% exempted. It is taxable, but there is an exemption because of which 100% exemption, because of which the product is 100% exempted. So that is 100% exempted. So no separate definition is there for these two. But the non-taxable, what is a non-taxable? Non-taxable supply will be supply, which is goods or service first of all, supply second, but it should not be liable to GST. So for being a non-taxable supply, it has to be goods first, goods or service. It has to be supply then it should not be liable to GST. So If we'll link two definitions, taxable supply and non-taxable supply. So from the literal sense, everything that should not be taxable supply are supposed to be non-taxable, but that's not the case here. See, if there is a group of taxable supply and there is a group of non-taxable supply, there could be something other than those two, because those which are not goods in the first place, those, even if they are goods, if not supply in the second place, they would not be included in either of those definitions. For example, monetary, I mean, sale of money or uh, let's say securities. So money and securities are excluded from the definition of the goods, right? So when they're excluded from the definition of the goods, they're neither taxable supply nor non-taxable supply. Suppose alcohol or petroleum products. Alcohol, petroleum products are not taxable supply because they're goods. They're also supply, but they're not taxable because the taxability of those are currently being done by state governments, and it is not included in GST. Still, the existing law applies to those particular group. One is alcohol and five petroleum products. So if they're goods and they're also supply, but they're not liable to GST, then it comes under the ambit of non-taxable supply. So that's all about taxable supply, non-taxable supply, and one more thing that I have to discuss is zero rated supply, which is not included in the exempted supply definition. Zero rated supplies are supplied to, excuse me, either abroad, I mean export, or supply to ACJ. It may be unit, it may be a developer. It's a very simple one. Anybody who has any idea about ACJs or export, it might can understand what is a zero rated supply now. So zero rated supply has been made a specific category. Why? Because there is a purpose actually in order to enable the people who are selling or supplying to the SEZs, in order to enable them to take the refund of the ITC. Because you see, if they're supplying to the SEZ, it is a deemed supply, sorry, deemed export, and because of which there is no GST leviable on it. If there is no output liability, then my ITC will not be used. In order to take a immediate refund or very, you say, easy refund of the ITC that I have in my hand, they have made a separate group for these people, and the more explanation will be coming on in the forthcoming chapters. Anyhow, uh, that's that. After exempted supply, I think okay. I think the inclusion part I'm done with the aggregate turnovers inclusion part. Let me discuss. I mean, revise about the exclusion part. In the exclusion part was first of all, that was the first item was inward supply, which is an RCM. So RCM, reverse charge mechanism have come twice under this definition of aggregate turnover. Uh, so what is this RCM case? You see, suppose I am a supplier and the service or the goods that I supply is under reverse charge mechanism. So if that's the case, then I do not have a output liability. The person I'm selling to, the person I'm supplying to, the recipient, have a output liability. So which aggregate turnover, in which aggregate turnover should this amount, should this supply included in? Mine or H? Recipient. It should be included in mine. Suppose I'm a recipient. Another example, suppose I'm a recipient. I'm receiving from somebody. I'm receiving goods from somebody. On that goods, reverse charge mechanism applicable. Should I include? I have to pay the tax. I have to deposit the tax with the government because it's in reverse charge mechanism. Now, should I include that amount in my aggregate turnover value? No, should not be included. It is excluded specifically. It's here in what supply, which are in RCM. There has to be excluded first of all. Transfer to or from job worker, I have already discussed. The taxes, though, has to be excluded anyhow. So that's that. So some other specific areas which are kind of related to this are like, suppose a person has two RCs. He has a RC in Delhi. He has a RC in, let's say, UP, and he transfers some goods to one from one RC to another RC. Is that a supply? Yes, it is. Now, every once there is distinct RCs, they are deemed distinct persons. So it's a very just like any other purchase from the market. It's included in definition of supply. Anyhow, that's that. Let me move on. Section 2, subsection 7, it talks about agriculturist. Agriculturist, why there is a definition of agriculturist? The definition is there because uh, he is a non-taxable person. If he is an agriculturist, he does not have to take registration at all. If considering he doesn't have any other business alongside, if his only business is agriculturist, he doesn't have to take the registration in the first place. So agriculturist can be individual and HUF. Corporate cannot be agriculturist. First of all, who has to cultivate land by own labor, by labor of family, by servant, whether he is paid in cash or kind, and by hired labor under the supervision of himself or a member of family. So family has come twice. What is the definition of family? Family has been defined in section 2, subsection 49. Family includes on the side spouse, in this side brother and sister, upwards father and mother, upwards grandfather and grandmother, not father of father, mother of father, but mother's father and mother, those are not included. So parental grandparents, those are included. Paternal, I mean. Okay, all right. And below, son and daughter. Okay. Only if the grandfather, grandmother, father, mother, brother, and sister will be included in the definition of family only if wholly or mainly dependent on the person. Anyhow, share in crop or lease rental of agricultural land are not included in the agriculturist. If I'm just leasing my agricultural land to somebody else, I'll not be included in the definition of agriculturist. That's that. Simple one. Moving on. Section 2, subsection 8. Appellate authority. Appellate authority are appointed or authorized to hear appeals under section 107 of CGST Act. That is ordered in original. So they are called first appellate authority. They are similar to CIT appeals of Income Tax Act. Moving on, section 2, subsection 9, appellate tribunal. They are constituted under section 109 of CGST Act 2017. They are similar to ITAT of Income Tax Act. Moving on, section 2, subsection 11. Okay. Section 2, subsection 11 talks about assessment. Assessment is nothing but determination of tax liability, which includes, again, self assessment, reassessment, provisional assessment, summary assessment. risk judgment assessment, etc., etc. Moving on, section 2, subsection 12, associated enterprise. Associated enterprise is defined as section 92A of Income Tax Act. Those are the lots of conditions are there. One, for example, if it has more than equal to 26%, um, etc., etc. Section 2, subsection 13, definition of audit, examination of a record, return and other documents to carry, to verify correctness of turnover, tax paid, refund claimed, ITC availed, to assess the compliance with the provisions too. Section 2, subsection 14, authorized bank. Authorized bank are those banks which are authorized to collect the tax. So when it is a case, I mean, it has come into discussion of authorized banks and the collection of the tax. The amount, the actual date of payment will be the date of deposit in the e-cash ledger. That will be the date of credit in the authorized bank. Moving on, section 2, subsection 15, authorized representative. Authorized representative is the as referred in section 116, who is authorized on one's behalf to appeal before GST officer or appellate authority, etc. For example, it can be a relative, it can be employee, it can be a CA, CWA, etc., etc. He can do what are the activities he can do. He can furnish details of inward or outward supply. He can file return. He can claim refund. He can apply for registration. He can make payment, etc., etc. Minimum qualification: graduate. Moving on, definition of board. Board is CBC, again, Central Board of Excise and Customs. Section 2, subsection 17 talks about definition of business. What is business? Business includes general activity of trade, commerce, manufacture, profession, packaging, etc. And any other activity in connection with and incidental to. Some other specific activities are also included in the definition of business. Those are acquisition of the goods, club, association, society, admission to premises, race club. So CFO and independent director are also included in here. So under GST, CFO and independent director are not employees. They're conducting their business. Anything that they get from a company, that will be a business income of theirs. Betting also is included in the definition of business. Central government, state government, local authority are also included in the activities done by them are also included in the definition of business. Moving on. Section 2, subsection 18, it talks about business verticals. What is business verticals? Business verticals are distinguishable businesses engaged in supply of individual related goods or services, subject to own risk and return, capable of being capable of functioning without affecting others, or they can be sold without affecting the others. So business vertically, just like I have a outlet here, I have an outlet there, I have an outlet over there in the same support state. I have three outlets. Now, why this is relevant? Now there is a provision, that is a provision in GST which makes a little bit different approach of handling this area. It has a law saying that it is not mandatory to take a registration for all the business verticals, but the supplier has option. If he wants to take registration business vertical wise, he can. Now why, how is that relevant? Because if that's taken, the credit maintenance will be very you see smooth in comparison to, because when those are mixed together it makes a lot of um, uh, you see, mess that has to be cleared out. I mean, there is inter-transfer. There is a case of uh, money transfer, how much we have paid to the other outlet, how much we have received from the other outlet, if we have sent some stock to there, what amount should be charged, etc., etc. Oh, there are lots of issues, so it has been handled in this way. So there is an option given to the supplier. If he wants, he can take registration business vertical wise. If he wants, in the same state, he can take three different registration for three different business verticals, which again should be coming under the definition of business vertical. It should be distinguishable. It should be engaged in supply of individual related goods or services. It should be subject to own risk and return. It should be capable of being functioning on its own. It should be capable of being sold on its own without affecting others. Relevant factors are like nature, production process, customers, distribution, regulations applicable on the outlet, the business vertical, etc. So these all things are relevant to determine whether it is a business vertical, but geographical differences are not relevant to determine whether it is a business vertical or not. Geographical difference is not relevant. All right. If separate registrations are taken for business verticals, then they are deemed distinct. Those will be treated as just separate persons. If there is a transfer from one vertical to the other, it will be considered as a supply and GST will be leviable on that. And the input tax credit also can be enjoyed by the person who is depositing the tax. Composite scheme, not business vertical wise. Definitely not business vertical wise. Composite scheme. It has to be a pan wise. So yeah, that's that. Coming to section 2 subsection 19 talks about capital goods. Along with it, I'll also revise inputs, which is defined in section 2 subsection 59. I'll also discuss input services, section 2 subsection 60. Now, capital goods, inputs and input services. Capital goods are the goods value of which are capitalized in the books of account of the supplier. Inputs are the goods other than the capital goods. Services are any services. Now, these three should be used or intended to be used in course or furtherance of the business. Furtherance is continuance, that's nothing. So, in case of capital goods, there is a separate point which says job worker. For job worker, it will be capital goods when it is capitalized in the books of Mr. X, the person who has sent the goods. In case of inputs, the separate points are like use of the inputs. Use of the inputs at the premises is not necessary to say them to be inputs. Put to use or actual use, also not necessary to tell them as inputs. Inputs are any goods other than the capital goods. It should be falling under the definition of goods. It should not be falling under the definition of capital goods. Simple, those will be goods. Those will be inputs. Input service, the separate points are like, is a very wide meaning and has a direct relation with outward supply. I'm sorry, direct relation with outward supply, not necessary to say it to be an input service. I mean, if we are taking a service and we are calling it as an input service, and somebody asks us, the service you are taking has no relation to the service you are giving, how can you take input for that? And no, that is not necessary. If we are taking and we are paying money for it, then it is an input service and it will be included and we can take the ITC for it. So that's that. One more important definition is coming on, which I have to revise. The casual taxable person. The casual taxable person is covered in section 2 subsection 20. Casual taxable person is a temporary business in another state for which no fixed, excuse me, no fixed place of business in state is there. Goods or service are sold as principal or as agent or any capacity. Now, this definition actually is not clear. Example will make it clear. The casual taxable person covers those cases in which a person, suppose say from one state, person from one state comes to another state to, um, okay, let me start from the beginning. In one state there is a trade fair, a supplier belongs to another state. During the trade fair the supplier comes to that other state, sells some goods and returns back. Now, it's a messy process in the last existing law. Now they have made a new idea. They have brought in a new idea saying casual taxable person. If a person comes from a different state and to a trade fair of another state and sells some goods there, in order to track them, in order to make it smooth, make the process of GST collection smooth, they have said those suppliers to be casual taxable persons. Now, what's the relevance? The casual taxable persons had to take registration separately. They have their registration in that state in which they have a fixed establishment, they have a place of business there. But when they are coming to the trade fair of another state, they have to take the registration again in advance. They have to pay the GST in advance. Then they have to sell. They have to declare how much they have sold. Then they'll be refunded with the rest balance amount if there is, if it comes in picture. So when the person of another state does the registration under GST in another state, then he comes to the trade fair. So he is basically transferring the goods from one RC to the other RC. That is also a transaction. For that, he has to pay GST. But yeah, he can also enjoy the ITC, input tax credit. When he sells the product there, he can enjoy the ITC that he has already paid. That's that. When discussing this, I said two terms. Those are, one is place of business, one is fixed establishment. Now there is separate definitions for these two terms. One is place of business. What is a place of business? Business Place of business is a place where business ordinarily is carried on, which includes the warehouse, go down, where the stock and supply or receipt is done, or where the maintenance of the books is done, where, I mean, even if he's engaged in business through the agent, these places will be included in the place of business. What is a fixed establishment? Fixed establishment is other than the registered place, which has a sufficient degree of permanence, and there is structure of human and technical resources. Now, connecting to this concept, there is a thing, there is a incident. Suppose A Limited is in UP. Suppose B Limited is in Delhi. B Limited has a branch in, suppose say, Rajasthan. C Limited, I mean C company, a branch of B Limited. Separate RCs has been taken for all three. Suppose A Limited is giving a loan to B Limited. A Limited is giving a loan to B Limited. Now GST is applicable. Who has to pay the GST? B Limited has to pay the GST. He's the recipient. I mean, sorry, he's the one receiving the money. So who is paying the money is the recipient, that is A Limited, and B Limited has to deposit the tax. Now, when he is paying the tax, he has ITC, input tax credit. Now he wants to utilize that further. He transferred the loan amount again to C company, that is branch in Rajasthan, saying, suppose he has a requirement, he has given a loan. Again, it is a transfer. Again, it is a supply, and again there is GST applicable, and the person who has to pay the GST is C company. Now, if you'll see, the ITC is with B company, B Limited, which is situated in Delhi, and the output tax liability comes in C company, which is situated in Rajasthan. So ITC cannot be utilized. This issue can be solved if A Limited in the first place has a branch in Rajasthan, if that branch directly gives a loan to C company. So there is no requirement in the ITC in the first place. Okay, that's that. Okay. If the transaction is regular, I mean, I'm talking about the casual taxable person. As I said, casual taxable person is a person coming from the other state to the trade fair, which is being conducted in another state, right? Now, if the transaction, I mean, if the person is having regular transactions in the state in which the trade fair is being conducted, then there is no registration required. If he is actually transacting in the state regularly, he must be having a RC. There is no requirement. Again, another case, if the transaction is irregular, but fixed place of business is there, again, he doesn't have to take the registration. He already has a place of business. He must have taken the registration before. Okay, all right. So similar to this definition, there is another definition, that is non-resident taxable person. Just like in this case, casual taxable person is coming from one state to another state. In case of non-resident taxable person, comes from one country to another country. Absolutely exact definition, just that the changing thing is only country part. Commissioner, Section 2, subsection 24, Commissioner of CGST, IGST, and UTGST. I mean, sorry, CGST and IGST commissioner, and principal commissioner of CGST. Those are called as commissioner under this act. Common working days. What are common working days? Common working days are those which are not declared as gazetted holiday by central government or respective state government or UT. If no holiday as per center is there, but state has declared it as holiday, then for that state it is not a common working day. For other states it is a common working day. Why is it relevant? Relevant are many parts. For example, in the case of registration, there is a provision saying registration is granted in 3 common working days. If not granted, then it is deemed approved. So it has some relevance over there. Section 2 subsection 21, central tax. Central tax is nothing but CGST. Section 2 subsection 104, state tax, nothing but SGST. Cess, section 2 subsection 22, cess refers to compensation cess. Compensation cess is just another cess. Okay. Section 2 subsection 23, chartered accountants, again those are defined in CA Act 1949. Company secretary, section 2 subsection 23, sorry, 28, my bad. CS Act 1980, cost accountant, uh, definition defined in section 2 subsection 35. CWA Act 1959, as defined in there. All right, those I do not have to discuss, I think. Section 2 subsection 25, commissioner in board. Commissioner in board is as per section 168, is the commissioner or joint commissioner who is posted in CBEC exercise the power with approval from the board. That person is termed as commissioner in board. All right. Section 2, subsection 26, common portal. What is a common portal? It is an electronic portal under section which is, I mean, authorized under section 146, set up by GSTN. So GSTN is a Section 8 company, a non-profit company. It is used to maintain the electronic portal, that is website regarding GST. All right. Section 2, subsection 29, competent authority. As notified by the government, notified authorities in relation to construction of complex building, etc. For example, MCD, DDA, architect, CA, etc. So those are the competent authority for the approval, etc. Section 2, subsection 30. It says about composite supply. Composite supply. What is a composite supply? Two or more taxable supplies naturally bundled, and they are in ordinary course of business, out of which one is a principal supply. Examples: laptop with carry case, machine with installation, registration with, repair with parts, healthcare with medicine, etc. etc. So these are the supplies which are related to each other, they cannot be separated, they are basically naturally bundled. So when this kind of supplies are there, these are generally, I mean, it has to come afterwards, but as far as I know right now, when there is a composite supply, it will be taxed under GST as per the principal component, the principal supply out of those. Just for example, like if there is a laptop and that along with that there is a carry case, the principal one is laptop. If there is education plus, suppose, let's say, bus service, so the principal supply is education. So accordingly it will be taxed. Relating to this, another is mixed supply, that is defined in section 2 subsection 24. Mixed supply are two or more individual supplies which need not be taxable, because here taxable services are not written. It need not be taxable. Those are an artificial bundle which do not constitute to be composite supply. So basically, if it is natural bundle, it is composite supply. If it is artificial bundle, it is a mixed supply. Now, examples of mixed supply are like there is a gift wrap of different products. Let's say you give a person a tie, cufflink, wallet, a belt. You make a pack and you gift them. So that uh, pack is when bought from a shop, and it is packed accordingly, and they charge a bulk amount. I mean, they do not charge specifically for product, each and every product. Then in that case, it will be in the under GST, it will be taxed in the way that the highest taxable item will be assumed that the whole bunch is only that one, that product. According to that product, it will be taxed under GST. Anyways, that's all about today. I mean, I have covered almost about around approximately 60, not 60, 45 around sections. There are a lot more. I mean, total almost around 120 definitions are there. I'll be revising those in the further videos. Uh, that's it for today. Thank you very much.